together for our moderator for session 1. Thank you so much, sir. I request the following speakers for session 1 to join us on the stage. I now request Dr. Divakar Hegde, MD, NABFIN, to please join us on the stage. And now request Ms. R.S. Isabella, CMD Repco Microfinance Limited and MD Repco Bank to join us on the stage. Please put your hands together. And now request Mr. B.N. Raveendrababu, MD Asivard Microfinance to please join us on the stage. And now request Dr. Kalpanaa Sankar, MD Belstar Microfinance Limited to please join us on the stage. I request a speaker, Mr. Animesh Anand, COO-South, Bharat Financial Inclusion Limited to please join us on the stage. I'll repeat again. Can I please have Mr. Animesh Anand, COO-South, Bharat Financial Inclusion Limited to please join us on the stage. I request Mr. Hari Vellur, EVP, ESAF Small Finance Bank to please join us on the stage. Can you all please give a big round of applause? And now over to Mr. Raghuvir Srinivasan.
Good morning, everybody, and it's an honor to be on this stage this morning, or should it be noon, with a high-power panel. Almost all the top guns of the MFI industry seem to be here in the panel today. It makes me a little nervous, but I'm looking forward to an hour of engaging discussions with all these stars of the MFI industry. As you all know, MFI is a very critical last-mile credit mechanism, and we all are aware of what happened in the early part of the 2010 decade in Andhra Pradesh. It's been discussed in the inaugural session as well. But after that hit, the industry has taken off in the last few years, especially with a lot of support from the government, a lot of government schemes like the Jan-Dhan Yojana for savings bank accounts, and PM Suraksha Yojana, Bima Yojana, and PM Jeevan Jyoti Bima Yojana. These are some of the schemes, Atal Pension Yojana. These are some of the schemes that have been pushed by the center very actively to promote last mile inclusion, whether it is savings or borrowings or insurance. But yet, I discovered that in an article written by Mr. G.G. Maman himself in our paper, about 3/4 of rural and 2/5 of urban population is still excluded, despite all the efforts that has happened in the last few years. And there's a long, long way to go in this front. So what I plan to find out from my panelists today is what needs to be done to improve this number over the next 5 years to a decade and reduce it, turn it upside down. Instead of 4/5 excluded, it should be 4/5 included. So what can we do for that? So I will start with Mr. Divakar of NABFIN. I would like to know from you, sir, one of the issues that the industry faces is funding, access to funds at economical costs so that it can on-lend. What is NABFIN doing, what is NABARD doing to help NABFIN and others in the industry in this respect?
Mr. Raghuvir, for this question. NABARD is the, should I say, the seeds of the whole financial inclusion has been sown by NABARD in the country. if you see the number of participants in this hall, I think maximum number of people are associated with NABARD in one way or the other. So that itself speaks a lot about what NABARD has contributed in terms of microfinance and in terms of financial inclusion, in terms of financing NBFCs in the country. Now coming to the specificity of our specifics of our support for microfinance and NBFCs, NABARD is one institution which is across the spectrum. You know, the entire value chain has been addressed by NABARD, whether it is capacity development at the field level, at the borrower level, or at the financing requirement, making affordable refinance available to the NBFCs. If you see the NABARD book today, substantial amount is going for NBFC as a long-term refinance. So that is the one major support given by NABARD to, I think our chairman sahab has morning, he is harping on that point. He has highlighted how we are supporting NAFINs in our refinance program, NABARD in refinance program. And also the capacity development. NABARD has established training establishment across the country at 3 places for catering to the needs of the MFIs and also banks, which takes care of the capacity development of all the officials concerned with the microfinance in the country. So that is another area, because without proper skill sets, I think it is difficult to address the requirements of the financing of microfinance in the microfinance sector. And third major contribution from NABARD side is the establishment of its own subsidiary, which is of course in collaboration with the government of Karnataka and Union Bank of India and other major banks, called NAFINS. Earlier it was known as NABARD Financial Services Limited. Now we have rechristened it as is a NBFC MFI, NAFINS Limited. So we are working across the country in 17 states. We are working. Maybe our clientele is something like 1.7 million people have been associated with NAFINS. So this is, I think, the demonstrating the walk the talk by NABARD, where we are preaching, we are telling other players that we can act in this way, we can help the rural women in this way, and same thing we are practicing and showcasing it. I think that way we are addressing the issues.
Thank you, Mr. Divakar. I would now like to ask the question, which will be to all the panelists. I'll go one by one. We see that inclusion is still not very good, the ratio of inclusion, as I said in my introductory remarks. Where do you think the industry is going wrong, or what do you think needs to be done to improve inclusion? What are the steps that each of you feels that we need to embark upon to increase financial inclusion through MFI route? Can I ask Ms. Kalpanaa first?
Good morning, panelists. I wish to thank Sa-Dhan for giving me this opportunity. From my point of view, if you talk about the South and with the statistics provided, I think in the southern states, it is overheated. Almost most of them are covered through microfinance. People who have been left out of microfinance, I will classify them as under 3 categories: the ultra poor people, farmers, and single women who are not able to bear the cost of the microfinance. Basically, at Hand in Hand, which is the parent NGO to which I was attached, what we used to do is, we used to give 2 rounds of loan to bring them into the credit culture, provide them access to savings, and then we used to expose them to microfinance loan. These poor people will not be able to, even if you take the case of farmers, they cannot take loans at 24%, which is being offered by MFI. If you are talking about financial inclusion, they are left out because somebody in their family, the father-in-law or their grandfather has some dues with the bank, so they are not eligible for any bank financing. So there is a huge opportunity if NABARD, institutions like NABARD can actually lend at lower costs to the NBFC MFIs, and they should give us a spread of 7 to 8%. Then we can lend it to them at 12%. Then we can ensure that the poor people who have been left out of the system, they also become as a part of the system. This is my recommendation.
Thank you. Mr. Raveendrababu?
Yeah. So I'm just looking back to the picture here. See, in India, 142 crores people, of which 48 percentages are ladies. One population is 48 percentage. That means around 72 crores, 69, 72 crores is coming. And out of these, 25% is already having job. And then the remaining people, if you take even 30%, you have crores of women looking for microfinance companies because they don't have other opportunities. I have heard the talk of the RBI, CGM, and other dignitaries here. See, they are actually the facilitators, not regulators. I don't think they are not regulators. They are facilitators. They are providing facility. What they are doing, they are putting some risk mitigation process in the system so that we can avoid, our microfinance companies can avoid a lot of risk in the future. This is what I am feeling it. This is one side, if you take it. If you take it the other way, the technology is key portion. Now, because you can get a lot of information on and off the system. And microfinance companies don't have that facility right now because of the cost involved on it. Now, people like, in organizations like Sa-Dhan or Microfinance, etc., they are collaborating with the IT people. They are providing those facilities. But most of us don't know where to begin with, what to take it, what to use it, and how to use it, what will be the results. So these are the areas of concern for microfinance companies right now, because there should be some mediators like Sa-Dhan should actively involve in transforming the microfinance executioners to the practical people in the system. This is how we can achieve the high growth in the country. You know, around more than 6 crores of people with 310 lakh crores of funding is in the microfinance sector. And in the itself, it's around 37% belongs to microfinance companies. So there is still abundance of possibilities available. But there lack, one is the usage of technology, use the administrative things by arranging the capital. Capital also, if we provide a proper, business chart, etc., to the banks or to the investing people, etc., there are fund available. This is what is my experience. This fund is available. Even you can see during the COVID season itself, how many people has raised the capital. So investors are not away from microfinance. They are ready to invest, provided we should provide proper accounts, transparency in the system, the technology in place, and the information should be in the fingertips. If we have to find out, and microfinance people has to identify these areas, and if we can, even in the case of NABARD, he already explained the difficulties. They don't have the immediate information about the cash movement. So far as they don't have that one, they are a little bit reluctant in getting more and fund. But if they are very familiar with the capacity, and they are having the facility to access those accounts instantly, there are possibilities that we can go for on lending, we can go for DA, we can for securitization, we can have also the co-lending. All these facilities are available provided there are cost for it based on the credibility of the company. So there are availability there, but at the same time, especially because of the microfinance inclusion process, government is giving a lot of concessions, facilities to provide that one. Banks are prepared because of these are specialized lending. So these are areas what I feel from my company, where we do have more than 9,500 crores of system business in place. And we are getting fund. We have no dearth in the fund, but at the same time, we are committed to the lenders.
Yeah, that's a valid point you're making, Mr. Raveendrababu. Funds are available, but MFIs have to improve their technology practices, their governance practices. That's a very valid point. Point well taken. Thanks.
Thank you.
Dr. Kalpanaa Shankar mentioned about how cost of funds is an issue, and Mr. Raveendrababu says funds are available. Let's hear from Ms. Isabella on what her thoughts are on this subject.
Good afternoon. Thanks for the opportunity. I would little differ from the other speakers that saying that liquidity is a big problem to the NBFC MFIs, especially after the post-COVID crisis, when the delinquency levels have gone up, almost all NBFC MFIs, whereas NABARD stipulates top-to-notch grading, where most MFIs are not able to achieve that. And again, SIDBI and other commercial banks, which all NBFCs, MFIs depend excessively for their resources, have stipulated, NPA levels at 5%, whereas the overall average is about 10%. So this is really, I thought this will be the right forum to express when NABARD officials are here, that getting the NABARD refinance, that the other causes can also be analyzed, considering for example, the experience of the company in the industry, and then what are the other background of the promoters, and such points also can be taken into account, not strictly by the benchmark and yardsticks of NPA levels, and because that's a temporary phenomenon due to the COVID impact. And secondly, the technology platform, apart from financial literacy, we are to transform into a digital literacy. And now, after the usage of smartphones and implementation of this handheld devices and kiosks and collection at their doorsteps, this is definitely going to be a transformation in this microfinance industry. And the penetration levels, if you could see, southern parts of India is highly penetrated, and Tamil Nadu, of course, leads the way. And Chennai, interestingly, there was a survey where it was only around 17%, but I would say that our company is, our highest proportion of outstanding is in Chennai. So probably because of the dense population, or because of our coverage with more number of branch network, that is one thing. But definitely the scope for microfinance is very high, and the kind of women empowerment we've been doing, the kind of women development we've been focusing on is really worth mentioning. The kind of financial independence the MFIs and the banks have come to give is really appreciable. And definitely there are a lot of scope for improvement in microfinance, but for the resources which the companies have to manage with the support of NABARD, especially for the cost aspect as well as timely resource management, so that our liquidity can be easily managed. So these are the issues which I really wanted to highlight. Thanks for the opportunity.
That's a nice one, Ms. Isabella. So of the three panelists now, three different companies, we see that one is taking a different view, and funds are a problem and rates are an issue. So let's see what Mr. Hari Vellore of ESAF says on this subject.
Good morning, everybody. I think being a representative from a bank, probably some of the issues which have been brought up by my co-panelists probably are not hitting us so badly, especially in terms of the funding part. But I'd like to go back to the question you started at the beginning with. Is there more financial inclusion that we have to do in the South? I agree that there is a lot of scope more. I don't think it is saturated. As a bank, we do direct lending, of course, and that's close to 5 million customers. Sorry. And apart from that, we do lending to MFIs as well. So, that is one thing in which we have a, slight difference between an MFI and an SFB. Talking about what more do we do, I think one of my friends over here has talked about bringing in farmers. And that is certainly one area of priority for ISAF Bank. We are doing a lot of work in the south, especially in Tamil Nadu, Karnataka, and we are going to Andhra also, targeting farmers, and also doing a lot of work with FPOs, which we see as a way forward. Apart from that, I think inclusion is not only the lending part of it. As a bank, right from the beginning, we've been opening savings bank accounts for every customer of ours. So if we have 4.5 million micro borrowers, we have 4.5 million savings bank accounts also. And this, in the next 2 years, is an area of priority with us, because it's not just the lending. We see a lot of scope in terms of inclusion and also resource raising from this community. I think it's something as commercial bankers, we generally tend to overlook this fact, but what we see is an opportunity over there. So that can help us in terms of liquidity or funding, etc. Two other things which is notable from my point of view is that we partner a lot with local self-government bodies. It could be ward members, it could be panchayat members, etc. We're doing a lot of work with them because they have a huge role to play in this community. They are the people who are in direct touch with these customers of ours from a micro point of view. And as a bank for the last 2 years, along with NABARD has been giving us huge assistance in this, and I must say thank you to NABARD in this forum. We've done close to 3,000 activities altogether with NABARD over the last few years. And that is another thing which we see as very important in terms of inclusion. So it's just not the lending, it's just not the liability part of it, but there's a whole lot of activities we do. So that is what I have to say on this subject. In terms of liquidity per se, it is not so much of a concern where we are concerned. That's what I'd like to say.
That's interesting, Mr. Vellore. Your perspective comes because you're a bigger fish in a small pond. So you're a small finance bank compared to the others on my right who are MFIs.
We have access to the low-cost funds, which unfortunately...
Exactly. And you said NABARD, I'm going to pose this question to Mr. Hegde now. You said NABARD is able to give you funds. Whereas I think Ms. Isabella and Dr. Kalpanaa Sankar made the point that NABARD should lend more. So I'd like to ask Mr. Hegde.
I'm sorry, I didn't say NABARD is giving us funds. I said they're giving us a lot of assistance in activities. We do avail refinance. There is that, of course, but a lot of activities we partner with them. Yeah. So that is a big help for us.
When we spoke about financial inclusion, first round we spoke about access to credit for the people who are still not a part of the system. I feel when you look at the statistics in the south, if you look at the insurance figures, access to insurance, especially health insurance, there are a lot of avenues to improve, especially after COVID. That is coming up as a very big issue and as what a client needs. So I think insurance is one area where in the south we can still improve and deepen our services. Thank you.
The question before is, some of the panelists have expressed that they are not getting enough support. NABARD is one of the institutions which is playing a major role in the whole ecosystem. We do agree that the finance goes based on different parameters. There are set parameters. So the big players who are having established systems and processes with them, I think they are able to mobilize the funds at a cheaper rate. But whereas the small players who governance issues are there, or some other issues are there, delinquency issue is there, they may face some problem in raising the resources at a cheaper rate. This is, I think, it's a market game. We can't help in that way, because NABARD also has to mobilize from the market primarily. Having said that, I feel as a MFI also we have to look inwards, whether I am able to adopt a better technology so that my operational efficiency will go up and my cost of delivery will come down, my operational cost will come down. So these are the area, only finance cost NABARD is taking care, or outside agency is taking care. But what about the other two costs like operational cost and delivery cost, transaction cost? Whether we can look inwards and address those issues so that at the end of the day, the poor women or the borrower in the rural area will be able to get the funds in time at an affordable cost. NABARD is equally concerned about it, but at the same time, I think all have to play together so that we can make it affordable for everybody. And ESG is one, ESG funding or these social stock exchanges, they can play a major role. Maybe we can blend them together and so that the end product will be more affordable.
That's a very relevant point on technology and bringing greater efficiencies. I'll come back to you on that in due course. But you want to talk?
Funding, you should not have look for the banks as straight away giving you funding. There are other options. You can go for DA, direct assignment. If you don't have much fund, you can lend it to, because being a priority sector, banks are ready to take your assets. It's very clear, and that is one method we can do. Co-lending, the government, the NABARD also, everybody is telling you do co-lending. If you could bring a proper technology which is suitable to that one, it is easy that you can better enjoy the fund availability. First, the fund availability, the interest rate is another thing. Availability of the fund is important. Once you get the fund availability, as Gentleman said, our operational cost can come down substantially because of the number of customers we can handle with the funding. Thank you.
So regarding the new guidelines which RBI had come out, it's really a path-breaking step. And removal of pricing caps is another reformation which has come, and that is really going to spur innovations and incentivize MFIs to do better and also pass on the benefits to the customers.
So I have a question on funding. Instead of depending on assistance from financial institutions or banks or small finance banks, what about market? Of course, risk capital is available in the market, equity capital. Of course, cost of financing is going to go up for you. Is that a viable option? There is a lot of risk capital which will, especially funds, private funds which are looking to invest. But what will be the impact of going to them? I would like to understand. Does it make your lending costs higher or make you inefficient in the system?
So just to share, so these are the various business dynamics. Of course, he gave some suggestions as to, and you were also telling why can't you go for capital? See, our capital adequacy is already above 35, just to share.
Not for adequacy purposes, just for resource.
Cost and resources. That is one option available, but we are adequately funded, not an issue, but I was telling you the cost of funding. See, once NABARD gives, it is two-way, the costs are very less, refinance cost, and we also have a tie-up with them. So that is the reason we wanted it, and we are in fact pioneers in this industry, 15-year-old company. But we had a refinance earlier, but what I was trying to tell, fixing the parameters, of course, there should be some benchmark, some yardstick and parameters, but beyond that, what NABARD could do best, we just wanted to explore.
No, what Mr. Hegde's response is, I think, valid. He says there's a limit to how much we can provide support. So why can't you look at other sources? That's the question. I think Dr. Kalpanaa Sankar wants to.
Nowadays, there are a lot of opportunities in terms of market-led debentures, NCDs, ECB. I think we need to diversify as an institution with a very well board-guided policy to what extent we can explore other funding possibility. It's always good to have a mix, especially during crisis. This comes in very handy.
But what will that do to your borrowing costs? Will that make you uncompetitive?
No, like bank loans, of course, it is we get at a better pricing. But overall, if you look at the blended cost, if only 20% of your total borrowing is going to be through the market funds, then it will be very well within the parameter you set for yourself. So it's another area, like over a period of time, if you learn about hedging, how to build in everything into our costing, we can manage our funding resources well.
Ms. Isabella, you have some, you have one.
Thank you.
So move on to the next one, next subject in this. We all were saying that South is saturated and everybody is concentrating on the South. What is this imbalance between South and the other regions of the country? Why are microfinance institutions all looking only at a particular region and not expanding their base? Of course, you will tell me that we do have business operations in the North, in the East and the West, but clearly the balance is in the South. And what can be done to correct this, and why is this imbalance in the first place? I'd like to start with Mr. Harivellur.
Thank you. In 2008, we went as an MFI, in 2008 as an MFI, we started our operations in Maharashtra, Vidarbha area. We chose two of the most remote towns or villages in this country. One is Pakanjor and the other is Sironcha. And that was an article of faith for the institution. And today, we have, though there is concentration in Kerala and Tamil Nadu, but about 40% of our business is in the north already. It is in Vidarbha, which is a relatively underdeveloped area of Maharashtra. We have a good presence in Chhattisgarh, Jharkhand, and our area of focus in the coming years is going to be Odisha, UP, Rajasthan, and Gujarat, which are relatively under funded from a microfinance point of view. So, in terms of our genes, maybe we are south, but in terms of our heart, we are across the country, and our area of focus actually is going to be the north from now on.
That's nice to hear, but can you take off your ESOF hat and put on the hat of an industry person
As an industry
and tell me
person.
about what the industry is doing? Why is this?
Well, I think probably if you were a south-based MFI, you are probably these are uncharted territories maybe. So there could be a block in terms of venturing into uncharted waters. That could be certainly a thing. And if there is an easier or relatively less difficult opportunity where you are, why should you do that? Maybe that is it. But today, if because of saturation or there is enough opportunities available in the south, you are being forced to go to the north. This is one. Second, I think because opportunities for graduation from an MFI point of view is a little limited. And I'm now talking not as a banker. If you want to graduate somebody into higher limits, that's probably not so easy for an MFI. So that will be another thing which will force you to look to other areas. This is my private view from look at the industry.
That's interesting. Yeah.
Yeah, what the other person has said too is very clean. See, in Tamil Nadu is the number one state in microfinance in all over India. Whether is it saturated? But the government is asking not for saturation. We are looking not for saturation. We have the infrastructure, we have the people, we have the customers along with you for last 5 years, 6 years, 7 years, paying perfectly in time, upgrading to the next level, second level, third level, fourth level people. There is an abundant chance for upgrading these people to the next level. If you take, for example, a small shop, she already took a loan for 60,000, 70,000. She is regularly paying for last 5 years, a category A customer. Why can't we go to ask her, can I give you another 1 lakh rupees additionally, so that you can increase your the purchase and stock in this system, and make that if you do like that one, I feel myself is that there should be a technology to collect the money weekly, not monthly, because these people cannot afford to have big amounts together to pay at once in a month, etc. So such a program, if we make properly, Tamil Nadu is growing, heavily. So the people also want money more for their business. So there is no, I don't think there is the Tamil Nadu style because of the people are more. Mm.
Mr. Raveendrababu, the question. The question that I have for you is, what you're saying is right, the shopkeeper example. But that will only give vertical growth. You will probably ensure he moves, he graduates, and as Mr. Vello said, he'll graduate into the higher banking system. What about horizontal growth? There are lots of ultra poor people who are excluded, who need to be brought into the system. That's the question I think Dr. Kalpanaa Sankar has an answer.
And your question was that South is saturated, why in the North, what we can do. So I made a note of 6 points. First is the question of social inequity and demographic profile of the states. If you talk about Rajasthan, for instance, they have to wear the Google. They can't go for marketing. Like those avenues are available. People know how to use smartphones, whether it is Andhra, Tamil Nadu, Karnataka, they can do marketing. So the social demographics actually define to what extent penetration is possible. Second, the transportation facility. All the southern states, in terms of costs, if you talk about the petrol allowance, like whatever you give, our field staff in the northern belt are very unhappy because they have to only rely on two-wheeler. There is no other alternative mechanism for travel. Third is the density of population. Even in a small cluster, we can form many groups, whether it is TN, Karnataka, Kerala. But whereas if you talk about density of population in MP, Maharashtra, it's scattered. So the efforts to mobilize people into groups also, the social mobilization cost is also.
But I'm sure in a state like Uttar Pradesh, it's actually the opposite. You will be able
East
to.
is different. North and the west is different. And then if you talk about quality manpower, here it is easy to get an engineer, people who are graduates. There you have to be content if you get a 12th pass candidate who can actually fix the IT infrastructure for you. Then I would also, I think the penetration of microfinance, we are targeting the bottommost quintile. So it is across the value chain. So there are a lot of SMEs and we are targeting people who are at the bottom, whereas that sort of economic growth is also lacking in other states. So many people are not they're not part of the system. Last I want to talk about the digital penetration. We speak about digital collections. Certain states, it's so difficult because people are not, they believe in cash economy. To make them do digital transactions, it's not that easy. So these are some of the challenges to make a financial inclusion universal or across the country.
So you're saying that the South is better developed, it has better GDP, better economic growth, and people are more educated, better technology, better transportation. So the market is bigger here.
Yes.
I'll turn the question upside down. If all this is good, what work are you doing here? You should be doing it in a place where there is not enough transportation, there's not enough economic growth, where people are poor. That's where your work should be concentrated, isn't it?
No, we are concentrating in the north, but absorption.
I'm not talking of Belstar, I'm talking of the industry.
But the industry, the credit absorption capacity varies. Here, people are ready to go to the next level, from a small enterprise to a micro enterprise. They have aspirational needs like a housing loan. So in the south, 20 to 30% are graduating to the next level, whereas in the north, we have to start from the basics. They cannot absorb a 1 lakh loan. So the credit, you have to start from smaller ticket loans, inculcate the credit discipline, and then move forward.
But isn't that the basics of microfinance? You start the small ticket loans, you give them people who are excluded.
But it is, see, we have to work with the societies. Like, it's not possible for them to come to a group meeting just like that. They have to take permission from their in-laws. I've seen women crying. So there over a period of time, a lot of developments have taken place with Jan-Dhan, with the mobile phone, like the awareness and the government's impetus on financial inclusion. Things have improved, but Tamil Nadu was a pioneer as far as SHG movement was concerned. Way back in 1990 it started. So it is at a graduated phase in comparison to other states.
Yeah, Mr. Raveendrababu, are you all running after the easy prey and not taking the difficult ones?
I see. No, here I am an experienced person in dealing with all India level. So we do have 22 states working with the microfinance. Though Tamil Nadu is the highest penetrated area and people, so old locations, etc. The second state is the Bihar. Bihar is giving me better result than Tamil Nadu. Here in Tamil Nadu, PAR is more than what is in the Bihar as well as the UP, Chhattisgarh. Just like the space in the north and northeast states. So I feel that north is as because it is not low penetrated. Because of that, we can get it. There are a lot of possibility in the north also. I should not speak that one into here.
Yeah. I'll move on to another question now. I think we got a satisfactory answer. We kind of know where the truth is. I want to talk to you about investment in technology. I think all of you refer to technology investments. We find that in this age of digitization, the industry, MFI industry, is largely cash-centric in many ways. And use of technology for credit analytics, you have excellent history of borrowers. How much of technology is used for these kind of analytical purposes? And as you yourself said, use of better technology can bring down funding costs. It will probably attract more financiers also to you, funders also to you. So what is the industry doing for improving technology standards? That's what I'd like to know. Your respective companies you can talk about, also talk about the industry.
Sir, regarding the customer's point of view, how you deliver this technology to the customer is one thing we've been reinventing, especially as I told you already, after this COVID crisis when they were not able to come to the branches in person, they were compelled to go through technology. So that is one revolution which happened, that they couldn't come in person and pay. So naturally they depended on this Google Pay or Paytm or other modes of payment. That gradually became the habit actually. Initially it was just a compulsion, then it has got set in. So that is the practice by which we are collecting from the customers and also through machines, handheld devices at their doorsteps. And secondly, if you see how we could use this technology from the corporate perspective is how data mining can be done, how to reach better segments, how to analyze which segments are more profitable and which districts, for example, or which branches have more potential. These are the uses of technology, I would say. And of course, the operational costs are very low when compared to your physical form of, your traditional and physical form of functioning. So these are the benefits of technology, and now fintech companies, so many companies are partnering with MFIs to see that technology is built in. So from financial literacy, we are also moving on to digital literacy. That is what I would like to say.
Yeah, Mr. Hegde.
Thank you for this opportunity. If you see the technology adoption by the industry, I think there is a huge range, big range is there. There are players who are, very much primitive in their approach, paper-based approaches are there. And there are very much established one using the latest AI, even artificial intelligence is also being used. Coming to my own company, that is NABARD promoted company, I think we are somewhere in between. We are in, to some area, we are work in progress, some areas we are doing well. So loan origination, loan appraisal, loan collection, then risk management, monitoring, all these things, every level there is a technology available. So if you use technology at every level, I think then the cost of operation can come down. But for me, for NAFINS, as we are at loan origination, we are having some technologies available with us. Loan appraisal, we are having technologies. But collection is a big challenge because still it is a cash-based kind of collection is there. Even UPI, most of our borrowers are not very comfortable in UPI transfers and all. That's what we are observing in the field. So we also saw that sometimes fraud also happens, all these things. So, but there is a huge scope for adopting technology, using technology in that collection area. And for that will also help us in better risk management, because I can, in a real-time basis, we can see the, what you are saying, that cash flow at the NBFC level. Even cash flow at the borrower level also can be seen. So what is the behavioral aspects of the borrower? That can be studied by AI. All these aspects are possible using the proper technology, and I can mitigate my risks. So, but for the NAFINS, yes, we are still learning the tricks. But we are fortunate that our liability side is taken care by NABARD. So we are, I mean, that may be the reason we are a bit slow mover
your
in
privilege.
slow mover in adopting technology. That may be the reason. I think. But having said, we are somewhere in intermediate. I don't say we are at the lower level.
Since you said you're taken care of by NABARD, I can't help but ask this question. Do you take privilege over the others on my right who would also go to NABARD for finance?
Absolutely no.
Are you a favored child of NABARD?
So this is a, I mean, difficult question. I know. But I mean, to be very precisely answer this question, I should say we are on a different platform, you know. So the funding which goes to the NBFCs, MFIs is a different altogether kitty, and which comes to subsidies altogether different kitty. So there is no competition between these two. That much I can say.
I'll believe you, okay? Mr. Ellore.
Thank you. So let me acknowledge that cash continues to be a problem. I think entire industry will acknowledge that. And as a bank, it's one of our bigger issues. But going to digitalization, I think certainly in terms of paperless processing, it's very much possible. And I think quite a few people, including us, have progressed quite a bit. And from a loan document point of view, we've almost switched over to no paper. Though there are some regulatorily required papers which we need to take from an insurance point of view, etc. So that part is done. But if you look at digital as we use it and how it's being used in this segment, I think there's a huge distance to go, and it's not going to be easy. One of the things is language itself, because primarily most of the digital companies operate in English, and maybe Hindi to some extent, but not too much, which is a big challenge because, you know, in this segment, you need to communicate to them. So voice assistance probably is going to be of bigger help than, you know, the normal digital initiatives which you see. This is what we found out. The other thing is it has to be assisted digital for a few more years, definitely. It can't be completely digital. This is our take from a digitalization point.
So there's actually an opportunity. If there are technology people in this audience, they can develop a language translation and other devices for your benefit.
And voice assisted is certainly going to be a big help.
So I'll move on to another point. We were talking about funding, we were talking about cost of funding, availability of funding. There are a lot of ESG funds available now who want to invest, and we saw Credit Access Grameen getting a big tranche of that. Now, but for that, you need to improve your governance standards. Where do you stand as an industry? Because the general impression as an outsider that we get is that governance standards in the microfinance industry needs to improve. So is that the truth, or am I wrong?
As an industry, all of us are working towards developing the ESG framework. But next stage is once the framework is ready, we have to develop products so as to we score well in the ESG, and that will mean a lot to the clients, and also it will bring about sustainability. And a lot of impact funds are looking at such results. So I can say we are in the infant stages. Whether it is tech, in future is tech, future is ESG. We cannot ignore. So recent reports, yesterday we saw what was written about Uttarakhand. Immediately we said we have to provide all our clients with a home protector policy because they need that sort of a cushion. So technology, ESG are all very important components. It is in the nascent stages, but we will see a lot of development in the coming years.
You made a relevant point. You need to develop products that are ESG compliant. We saw yesterday Indore Municipal Corporation, it came out with a municipal bond issue, and 240 crores or something. And it was linked to a particular project which is ESG compliant. Otherwise, Indore wouldn't have got this bond through at all. So why can't you develop products like that? You get a set of borrowers, pool them, which are ESG compliant, environmentally or energy related, who can then borrow from you, and you can in turn get it refinanced with these ESG funds.
We are doing small pilots. So once the pilots are successful, then we'll take it on a big scale.
Mr. Raveendrababu?
I have experienced this foreign funding very well, not from Asivard, but from my previous company, Microfinance. See, this is very cumbersome. It's not easy to get these people unless you have a strong management system with a fully technology-driven and MIS, etc. should be very strong and you have to run behind them. But I am not discouraging anybody, and not because this is a very good opportunity for microfinance companies if we could get it. But we have to think that we have to come with all the things with technology and instant reporting, MIS, risk management practices, everything has to put into place. And these people have a lot of procedures. It takes 6 months sometimes to get one loan. But once you got it, to maintain that one, it's okay. And at the same time, it is a big credit. It's better than getting a credit rating from ICRA or CRISIL.
One last question. I think we're running close to a time. One last question. I don't know if audience questions are available. So last question before I go to the audience. This is more for Mr. Vellore. You spoke about graduating borrowers. Now, microfinance is doing an excellent job, especially in the South, for small borrowers. As they succeed in their businesses, as they keep growing, what are small finance banks like you doing to graduate, to help the graduating borrowers to access funds as they keep growing?
So graduation, I think it is a logical step as far as we are concerned, because we want to be with the borrower or the customer, let me say customer, not the borrower actually, through the entire cycle of what they aspire to. And when we talk about what we do in terms of actual graduation, we have a MSME department who's almost exclusively concentrating on this segment. So it could be in terms of, beyond 1.5 lakhs or so, what is it that we are doing? I'll give you a few examples of, what we've done. Once in Madhya Pradesh, when we were traveling, there was this lady who came and said, she makes these paper plates. She has a machine which stamps them. And she says, I employ 4 people and I have 3 of these machines. Now I need another 8 because that's where I'm going. There are, tailoring shops, all of them who need this. So we have their credit history. They've gone through 5, 6 cycles with us. So this gives us more than enough confidence that these people are eligible for the funding. And what is more interesting is that this lady is actually employing 4 or 5 other ladies who are part of this center or Sangam as we call it. So we are very confident about this segment that that is one. Second, now all of us probably are the first lenders to these borrowers or customers. We took that risk. And it would be pretty foolish on our part to let them go. Once they have got a credit history, they have built up a good record. If we let them go, it is very bad commercial sense on our part to do it, if you see what I mean. So we have the history, we have the confidence, and we have their record also. This is one. The second is we have their accounts, and we would like to make them use their liability accounts also, because that is what gives you the entire picture of that client. On the borrowing front, you know what you lend to, etc. If you have the liability account, you know their spending patterns. Where is it that they take a loan from? Have they taken a 2-wheeler loan from some other bank? Why not from you? Things like that. So we are trying to build up an entire department to handle the graduated segment.
That's nice.
We need more focus on these graduated entrepreneurs because it is not only credit requirement. As a company, we have to specialize in underwriting, evaluation of the enterprise, even to give a loan against property. That is from the company perspective. What we did was partnering with IIT, IISB, so as to improve the skill sets of the clients. They need skill upgradation, they need business coaching, they need some assistance for preparation of business plan. This is the need of the hour. I've seen this happening in South Africa. So if we can have some SIDBI, institutions like SIDBI, promoting such units at the district level, this can be inbuilt into the cost of the product. But people need hand-holding to graduate from a small enterprise into a micro enterprise.
Thank you. I think we are out of time now. Maybe a couple of questions from the audience. Just 2 questions, please. I think there are 2 hands that side. We'll stop with that. Somebody can take a microphone there.
Thank Thanks, Karthik. I have two quick questions. if
Please
there's
introduce
time.
yourself. Sir.
Amit Arora from World Bank. One question for Mr. Vellur. For the graduation part, is there scope beyond financing institutions to play an enabling role which will further help in accelerating this transition? And what could that be? That's one. Second, sir, you mentioned about savings in your initial remark. And I think that's a very, very progressive outlook. And that's a problem which we have collectively not been able to solve. Invariably, all business models survive on credit. We don't have any pure play savings-led model which shows that there is sustenance. 4.5 million credit customers. What percentage of liability side customers come from that cohort? Not necessarily all borrowers are also maintaining good balances. You can speak more generically, industry, not necessarily your institutional number, but that's something which probably will be very useful for others.
So to answer the first question in terms of what do you do for graduation, I agree with my colleague over there who talked about skilling people into making business plans, etc. That is extremely critical because beyond a certain level, they really don't know how to present a case itself to get this. Maybe we know them, but how do you give a marketable business case? I think that's very, very important. And I think Tamil Nadu government especially is doing a lot of work in that, in which we'll be partnering also. The other part of it in terms of how much of our liability business comes from this segment, it is not great. I would say almost negligible as of now. But the fact is that, when we did a survey and customers were asked, so they said this bank is a lending bank and that bank is where we have our money. So generally as commercial bankers, we are not really tuned to how to do that. But over the last 2 years, the thinking has changed. And we are now actively trying to see what is it that we have to give as a product to make sure those cash flows also come to us. To give an example, we could give QR codes to these customers of ours. And the credits could go into savings bank account. So that is a big saving for them. They don't need to handle cash. They don't need to go to the bank to deposit, etc. I'm just giving you a small example of how we can harness those cash flows into the formal system without too much headache for the customer. So a QR code is definitely one of them. Second, can we train them to use the UPI code effectively so that they don't, again, cash is eliminated. Right? So these are a few things which we are kicking around with to see what we have to do. The third thing is very, very simple. If you see most of the nationalized banks, they give passbooks, whereas the new generation of banks give only statements of account. But I think this segment wants a passbook. So that is, you have to give what the customer wants. So this is another lesson which we've taken to heart. We've made up our mind to, give passbooks so that they have something in hand and that this is just not a lending bank, it is a complete bank. So these are 3 or 4 big things. They sound very small, but for this segment will be very important.
Yeah, thank you. The last question for this session.
Thank you very much. I'm Tarun Mohan from a company called NextGen, and I've been hearing about the problem of cash collection and digitization with the microfinance segment. Now, we are the partners for Sa-Dhan for the UPI 123 Pay, which enables UPI on the feature phone. And we have also a grant from the Government of India through MIT to Sa-Dhan and us for the first pilot in India. We're doing it with a partnership in Karnataka. But what it also includes is basically UPI auto pay, where we can also do part collection of the EMI. We've also proposed to Sa-Dhan that we build a centralized credit rating platform, because in our solution it includes bill payments, money transfers, merchant payments, and also UPI EMI collection. So using all the transactions, we can build for the industry a credit rating platform like what CRISIL or Fairfax has. And then also do it for gold collection. Some banks are asking us for the gold collection user base, the same solution. What we're doing basically is enabling, making the cost of collection down from you to a digital mode and maybe make it half or 0.75, 0.65%, and then give you other avenues to say, do savings also as a part of the whole platform. I'm happy to talk to the members over here and discuss how.
Thank you, sir. That's kind of you to make the offer. So we'll wind up here. I hope you had a good session, enjoyed the discussions. Very knowledgeable people. I'm sorry that couldn't spend more time here talking to them. We could have had more insights, but we'll have to stop here for now.
Check.
You can always talk to them outside the session on the sidelines during lunch or whenever. Thank you.
Thank you so much. It definitely was interactive and absolutely informative. Please give them a big round of applause for their time and for a lot of information. I now request Mr. G.G. Mamin, ED CEO Sa-Dhan, to please join us on the stage to felicitate the guests and the moderator. I request him to felicitate Mr. Raghuvir Srinivasan, the moderator, editor, Hindu Business Line, with a memento, please. Will you all give a big round of applause? I request him to felicitate Dr. Divakar Hegde, MD NABFIN. I request him to felicitate Ms. R.S. Isabella, CMD Repco Microfinance Limited and MD Repco Bank. I request him to felicitate Mr. B.N. Raveendrababu, MD, Asivard Microfinance. I request him to felicitate Dr. Kalpanaa Sankar, MD Belstar, Microfinance Limited. I request him to felicitate Mr. Hari Vellur, EVP, ESAF, Small Finance Bank. I request all the speakers and the moderator to please come forward for a group photo. Thank you so much.